Howdy, folks. Sorry about the delay. Please just let me know if you can hear me again. I'm going to go through the analysis of the charts now, just setting them up. And someone just asked why I run the... what? Sorry about the delay. Oh, hang on. Okay. I've got a feedback. Hang on 1 second. I'm just getting to know the software. It's not as easy as you might think. There are a lot of moving parts and different computers, but I think we've got there. So if you can hear me, just let me know, and then we'll go straight into it. Okay, folks, so let's start with natural gas, and we'll go through some of these other commodities. I've added another one as well, which we'll talk about shortly, and that is XBIT. And in the meantime, you can go and look that ticker up. It's the biotech ticker, and I've got it trading on Black Bull. You can trade it on NASDAQ and most brokers, so keep an eye on that one and check it out, see if you can find it, because I'm going to come back to that shortly. But so it's a sort of a... it's not a commodity, but we'll talk about it in the same group of instruments. But let's go with natural gas. Sorry, I'm just switching charts here. So natural gas. So we're out of most of our position on natural gas, and I've redrawn this chart now because that downward channel, as you can see, we've broken out of that one. This downward channel, which we were sort of observing and trading, we've now broken out. We went long at $2.60. And we got up to $3.40. So almost an 80-cent rally on that, which is quite phenomenal considering, from the bottom to the top, it's 30% or so or more. So a big rally. And we've just now rejected from this 340 level, which is this previous swing high here. Whether we're going to continue to push up through there or not, I don't know. But I've drawn this larger channel on the chart with these lines. And I've eliminated this downward channel. That red zone there is the sort of order block level or supply and demand, however you want to call it, depending on your latest trading technology or terminology, rather. So anyway, what it basically is, it's an area on the chart where there have been swing highs and lows and reversals in the trend, and that those levels have been respected. Now you can see on this level here, this red level. By the way, there's an indicator. If you don't want to draw these yourself, there's an indicator on TradingView. And if you don't have TradingView, if you use Black Bull Brokers, the link's underneath this video, you can get their pro version. I think it's called Pro or professional version or whatever for free. But there's an indicator on TradingView, and I'll just click it if you're not aware of it. And it basically does what you'd have to do manually. It's not always perfectly accurate, but it's helpful. And it's called the MSB-OB indicator. And the only thing I've done to the defaults here is, and this will be different depending on, I'm not sure if you can get this indicator on other charting packages, but it's definitely on TradingView. Basically, it's just drawing zones of support and resistance like you would do yourself, but you don't have to do it. It's automatically updated. And when those levels are violated or respected, it'll show you on the chart. And I've changed that default. A little tip I picked up from the video that TradingView puts out to promote this indicator, or the people that develop the indicator, and I've changed the default to 0.273 on this fib factor for breakout confirmation. I don't even know what that is, but I've changed it as per the recommendations. It doesn't seem to make any difference. The default's 0.33, and you get these lines, and you'll need to check them because they're not always accurate, but they roughly represent the supply and demand or order block areas with a fancy new terminology. And these levels here, these circles, are the areas where we've been trading from. So our broad trade structure is indicated by these circles. And if you've been following me on YouTube or Twitter even, or my live trade chat room in the members area, you'll know that this is the broad sort of structure that we've been trading. So we were long all the way from around about April, and we've been buying dips up to then. You'll remember we actually sold rallies on 2 occasions on these 2 points here. And if you've been following, and I've posted all of this up in Twitter and YouTube as well. So we were selling at the top here. We got about half of this move down, and then we started buying near this 200 period moving average. We suffered a little bit of pain as we dropped below there, but we quickly got back above it again, and we retained our position. And we've got out of most of it now. 3/4 of it we're out, and still holding 25% for a rally back up to this zone here. Now, remembering these these circles are the areas from which I've traded in general, lots of different trades in between. But basically, since that circle, we had been long. Since that one, we were short till about halfway. We got long a little early, but not too bad. And then we've been long based on that reversal off this channel bottom and this green supply and support zone. Now, the next area for this price to target now naturally is the top of this very long-term channel. Now, a lot of people have been saying, well, yeah, it's a lovely, nice channel. It's very long-term, but isn't this a bear flag? And I've had that problem thrown at me many times. Let's have a look at the week chart and see if that makes any more sense. So looking at the week chart, and this is the NYMEX Henry Hub week chart. It's a very long-term chart, and as you can see, kind of messy. Now it looks a little bit strange to me here. Now that's about right. So yeah, so what I wanted to point out, this channel here so people are calling it a bear flag. If this was a bear flag, indeed, and it could be. Now the reason I say it could be is because it's a flag angling upwards. We've had a sharp move down. We've consolidated in this range. We're now moving sort of sideways in this slightly angled upwards channel, which is a classic bear flag. However, bear flags normally take place at the top of rallies. This pattern here is occurring right at the bottom of a downward move. We're right at the bottom of the natural gas price chart. If I put a monthly chart on here, you can see where we are. Now we're right at the bottom. It's not cheap at the current level in the middle of this channel. If you look back from where we are now to the left, you'll see we're near the lows, but not at the lows. The lows are $2 and below. $2 to $2.50 is a kind of a low but not cheap zone. And then $2.50 to $3.50, kind of where we are now, is the average sort of price for natural gas. So it's not cheap. And that's the monthly chart. You can see where we are now. But if you were to call that a bear flag, you would have to at least think that we were at the top of an extended rally. We're at the bottom of an extended drop. So I don't think this is going to work out to be a bear flag, but we do have a channel. Now, what I wanted to point out for you, this top line of this channel very quickly, I want to point out to you that this is actually, let's just zoom out. So you can see it's a beautiful channel. It's perfectly respected. One touch there at the top, several touches along the bottom. But look across to the left-hand side here. And what's even more interesting, and I've stolen this little trick from someone that you might follow on YouTube. Yeah, I'm not going to say anything else about this particular person, but someone who's very fond of drawing channel lines and parallel lines, and you'll know who I'm talking about. But there is some value in what he says, for sure. That line that we talked about, the top line of this channel, you can see another very interesting point. We'll talk a lot about natural gas today, but this level here, if you remember going back into January 2023, 1 year ago, let's zoom in on that level there for those of you who were trading natural gas at this time. And I actually put this trade up on X, on Twitter, when it occurred. We reached the top of that channel. We're going to zoom out a bit and show you in the broader perspective again. We reached the top of that channel, and that was at $3.30. I don't know if any of you remember, but when we were trading this on Twitter and YouTube, I took a buy trade there on natural gas at around about 335, and eventually that trade stopped out. That was one of my 2 or maybe 3 losing trades that I've ever had on natural gas, and that was one of them. And the reason I took that trade long was because it was the top of the channel. A lot of other people took that trade long and were very relieved to get out of that position eventually, months and months and months, in fact, a year later, almost, when we reached that level again and touched the top of the channel at exactly the same price that we originally tried to buy at almost a year ago. So that's kind of fascinating. And that's the reason why it was rejected there initially, because everyone that was long there who were holding on, hodling their long trades, diamond hands, holding on to their long natural gas trades. And I'll hazard a guess that there are a couple of you in this live stream right now who did exactly what I'm about to say. You took a long trade there, you held it and held it and held it all the way up until November this year and managed to get out of that trade, perhaps having added on dips. In other words, added to your losing position. And in this event, obviously, it worked out because you would have got out of a lot of your trades there, as many other people did. And you can see how the market dramatically collapsed the moment we touched exactly that trend line a few weeks ago and dropped dramatically, tried to get back up again, and then gaps all over the show here. Same level, that's why it dropped. And now today, we're trying to get back up there again. And I think we'll get there. I think we've got every chance of getting back up to that level to try it for the second time. I'm not sure if we'll get through on the second event, but certainly if we do try for a third time, we should get through. This one may be a rejection yet again, a double top. Let's see when we get there. Let's see if we can get to 360, 370, maybe 380. And I say 380 because we could get a little spike up through that level, a false break above there, up to 380, maybe even $4. I don't know. But I think we're not going to be able to get through there on the first go, and we'll probably have to come back down again. If we try it on a third attempt, I think that'll be the go. Getting back to this top trend line, you can see it's a beautiful bottom channel trend line. But let's just go a little bit further back in time. And we've talked about that one incident that happened there. Let's go back further in time. I'm going to use today's video. I was going to talk about all sorts of things. I'll tell you my positions on the other instruments shortly. But I'm going to try and use today's video. I've changed my mind all of a sudden to try and teach some of the stuff that I'm looking at on natural gas all day long. And this is only the tip of the iceberg. I'm a technical trader. I do keep an eye on things like the news, geopolitics, weather, all of that sort of thing, storage capacity, storage levels, demand, all sorts of things. Sorry, I'm just trying to make sure I don't miss anything else. I look at the COT report. I look at, I think all the things that everyone else looks at on natural gas, but I put my main emphasis on the charts, on the technical charts. I believe, I'm a mathematician, but that's not the reason for this, but I believe everything that you see on the charts reflects what's going on in the real world. And you'll see it first on the charts, often, not always, but often you'll see it first on the charts. And then the reason for that move becomes apparent later. People who trade the news are always a little bit late to the game. And I believe that the price reflects on the charts, reflects what is about to happen, what's anticipated to happen, what has already happened. It's all baked in to one single number on the screen in front of you, which you can put then into a pattern and form an idea of where this market's going. So having said that, I do put a lot of emphasis on technical charting. Let's go back along this channel top again, further back, much further back, and see where last time we visited this channel was. Remember, this is now the same channel. This is going back 2 years or longer. And in 2021, March 2021, there's that channel line. We did exactly the same thing, bounced off it, not only once, twice, 3, 4, 5, 6. We bounced underneath it on that occasion, 7 touches. We bounced underneath it on that occasion, 8 touches, 9 touches, and we broke through it on that occasion. So 9 or 10 touches on this channel line that we're trading off today, maybe 2.5 years later, we're trading off the same line. Now, don't tell me that this price is not going to try and attempt that line on yet one more occasion. We've tried it so many times from both sides, the tops and the bottoms, going back a year, 2 years, months and months ago. So, for example, this one's in November. These touches are earlier in the year. That one was a little bit earlier in October. That one didn't quite get there. But prior to that, a year ago, we were trying to buy at 3.3 or 3.5. Prior to that, 2 years before that, the price was trading not once or 2 or 3 times on the same channel line, but up to 10 times. So don't tell me we're not going to try and get there again, because I think we are. And when we get there, I think this is going to be the second serious attempt at getting to this level. I don't think we're going to break it on the first attempt. I could be wrong, though, but I think we'll try and get up there. We'll spike into that area. I think we'll test the channel line at the very least. Probably and possibly, the better word is possibly with an R. It's a combination, a spike through there to stop out a few of the exuberant longs. You know how it works. The moment we break or close above that trend line, everyone's going to get long. Not only everyone, but everyone and their dog too. And that's going to be the perfect opportunity for those who claim market manipulation to actually have a real case and to witness the price being driven back down again. That's what I think is going to happen. Once again, I'm often wrong. I could be completely wrong. And I don't know if that's the case, but I don't see any reason psychologically why the market doesn't have its eye on the top of this channel. And that's natural gas, folks. If we break below this channel line now, and that would take us down below 2.2, down into this green zone at the $2 level, then we'll have to face the possibility of getting to 1.9, 1.8, 1.78 into that region. But as long as we hold above that dot circle there that I've just drawn in, we'll be fine, I think. Well, obviously we'll be fine because we won't be below it. But how far we're going to get to the upside, I think this zone here is where we're going to try and get, but I think we're going to struggle to get there. All right, so that's natural gas, and I've taken way too long already because I didn't want to discuss it for that long, but anyway, the opportunity arose, and that took 43 minutes, I'm afraid. So I'm going to go through the other ones quickly. I'll do another video later on today or tomorrow and cover the other things. Let me just go through from left to right. You've seen me doing some of this analysis on the charts. I'm going to go through them very, very quickly because we've got to finish this video off. So this is the euro against the US dollar. We're long on this currency. We have a sort of a megaphone forming on the day chart here on the euro. Spike up, spike down. That was the NFP move, if you remember. Jobs report, which turned out to be completely bogus, as they always do. Most of the jobs, in fact, I'd say 90% of them were created by government vacancies and second or third part-time jobs. And not only that, but all the jobs data from the previous month was revised lower yet again. And we are now about 1 million jobs down in, as far as I understand it, and the numbers are a bit vague and a bit difficult, but it looks like instead of being $1 million jobs up in 2023 and into 2024, we're actually 1 million jobs down. And expertly and craftily hidden by the statisticians and those in the White House and in Washington. So that's what caused this flip-flop on the euro. And since then, we've gone sideways because the market's saying, well, we don't know what those job numbers mean, if anything. And so what are we going to do? Are we going to go up on the euro? Is the dollar going down, up? What are interest rates going to do? How do jobs affect the forecasts for the Fed looking forward, and so on and so forth? Who knows? It's all a whole bunch of hogwash. Quite a lot of the time, we don't know what's really going on. But we are long on the euro, and our stop loss is below this spike low for the stop loss, and our target's up here somewhere around 1.1. If you look at this on the 4-hour chart, we're just holding above the support. There's that megaphone. There's the major support levels. Once again, this is drawn in by that software which I spoke to you about. Once again, just to remind you, if you missed it, MSB/OB, all that does, and change the default to 0.273, all that does is it draws in these order block supply and resistance support, and supply and demand and support and resistance levels. So that's what that does. And you can adjust these if you want to, or just use them as an idea and tweak them, put your own levels in. But so I'm aiming for the red block. Stops are below that level there, below this megaphone, basically. And I think that's an iffy trade. I don't think it's great. Same sort of thing on pound. Here's a good idea for you on pound dollar. If you want to trade this, we're stuck in this range right now. Quite a nice flat top there. Very well-defined top. I like that. Black line. And a very well-defined bottom in this very short-term range. And it's not only this recent definition that we're looking at, it's also going back here. So those two black lines, a break and a close above the black line, the top black line on a daily basis, followed by a retracement pullback to buy, or a break below the bottom black line, followed by a retracement pullback into the line to sell. That's all I can offer you on pound at the moment. We're at the hands and the mercy of whichever way the markets want to go. Dollar yen, I've drawn two paths on here. We're short on this one. We're not in the pound at the moment, by the way. Dollar yen, we've got a spike low and a spike high, and we're trapped in between them. Those are the two paths. We're short on the dollar yen. My target for dollar yen is in the mid to low 130s, and those are the paths that we may or may not get. I've got plenty of ammo on this, and I'm willing to sell more and more right up into this red zone, even right up here at the 78.6% fib, just below 150. I don't think we're going to get there. I think the spike high that we've just recently encountered. Was that three days ago? Was that Friday? Oh yeah, that was the NFP day. So that was NFP Friday. So I think, you know, as long as we're below there in the short term, and that is the 50% retracement of the move down. So I always like the 50% retracement. My favorites actually are 50% and 78.6%. So we're at the 50 right now. We rejected from the 50, just trying to edge up a little bit, but nothing to worry about. And I'll be looking to add to this short trade if we have to, which I hope we don't, but it's not a problem if we do, at 147.50, and then potentially into this zone here around 149 to the high 149s. So that's the dollar yen. And then Swiss yen, same sort of thing. We're short on the Swiss yen. It's not great. These are all-time highs, at least 20-year highs on the Swiss franc dollar yen, and we're right at those highs now. We did have a spike high on Friday as well with the NFP, that green, the yellow globe there. So I think this is what we might get. I like the fact that we made a new high above that high to the left and then rejected. So that's a false breakout as it stands at the moment. But today, or at least this week, we need to have another strong push down. We're short on Swiss franc, Japanese yen, and we're short on the dollar, Japanese yen, none of the other currencies at the moment. Stocks at the moment, where I'm hedged on NVIDIA. I'm going to talk about this hedge trade in a separate video for members, but we're basically short at 500 and long at 530. Short at 500, long at 530, same size positions. I'll discuss that with my members as we go through that a little bit later on today. In a couple of hours' time when the market's open, we'll take that along as well. Basically, what I'm looking to do here is to try and get out of this hedge position. It's a smallish position, so it doesn't really matter if I lose it, and I'm going to have to take off one side of the hedge at some point. But perhaps we can get another good rally on NVIDIA today, the third day rally. This is what I'm thinking. I don't know if it's going to work out. So remember, we're short at 500, long at 530. We might get a third day rally today. Look at the way this looks. This is an acceleration pattern on NVIDIA. These are new all-time highs. So a bit of exuberant, bit of FOMO, bit of hype, but too much drama going on. Doesn't mean we could not go further, and maybe we could get up to 560. Maybe we could get up to 565, 550, and that might be another opportunity to sell. If that does happen, what I will consider is exiting my long hedge position at a profit. That will be at that, if we get to 560, that'll be a $30 profit on my long hedge and a $60 loss, floating loss at that point on my short hedge. And I might consider then adding another short trade. Let's say it's 560, taking profit on the long, adding another short, and riding the whole bunch down, both the shorts at that point. I don't know how that's going to work out, how I'm going to play it, but I'll do that with members as we go along. But that's the idea. And then stocks, we don't have anything on NASDAQ or S&P. We've taken profits on the shorts. It's now rallying back up again. My overall views for stocks are shown in my previous videos, also on Twitter and X. Basically, I think we're going to get new highs again this year, but then also a fairly dramatic fall off at some stage around about the election time, or perhaps including when the Fed starts cutting interest rates more or less at the same time. They may be a little earlier than that. They may be later. A lot depends on GDP and jobs and inflation and all sorts of things that are going on at the moment. So we'll wait and see. But not too heavily involved in stocks at the moment. So we have that one hedge position on NVIDIA. We have a long position on Apple as well. We're long on Apple from 181 precisely, and we're at 185 now. So actually, the profits on this Apple trade, remember, this is a $200 stock. NVIDIA is a $500 stock. So the movements on a $200 stock are equivalent to double the movements roughly on a $500 stock. Also, Apple doesn't move as volatile as, let me repeat. Also, Apple doesn't move with as much volatility, so it's so it has smaller moves during the day: $5, $3, $2, $6, $7. Whereas Nvidia can move $10, $20, $30. So I've got quite a decent position on Apple. Stops are at break even. We're $5, $4 in profit on Apple, and that long trade on Apple has actually made up for most of the floating losses on Nvidia. But So there's a little bit of a hedge there already going on with that NVIDIA trade. So we're hedged on that. We're long on Apple, in profit on Apple, some profit on the long trade in NVIDIA, and a bigger amount of loss on the losing trade on NVIDIA. That's that. So Microsoft seems to be holding well, and Tesla, we got no trades. Tesla, a few worries about Elon and concerns about him. And I have general worries about electric vehicles and China making very good electric vehicles and challenging people like Tesla and Ford and BMW and so on. And these things just getting cheaper overall, and squeezing profit margins out of companies like Tesla. So I'm a little bit worried about the sort of dynamics within the EV industry. Tesla's obviously got the upper hand, fantastic company, brilliant in everything that they do. Maybe some build quality issues, but generally definitely the leaders, but they're not cheap. And things will get cheaper, other companies will catch up. That's one concern. The overall concern for me about EVs is I just don't think they're going to be around in 50 years. But that's another story for a different discussion. Right, let's go to, and this is such a long live stream, going to have to really finish off. Uranium, URA, we're long on this, nice rally. In pre-market, that's up as well. UEC, we're in as well, also up in pre-market. Actually, fractionally up in pre-market. So that's URA. We're looking for this to carry on moving higher. Basically, you can have a look at my previous videos on that. And UEC, if you're not long on UEC, this might be an opportunity. We have this sort of rising pattern here, not quite a rising wedge, but we've got a rising 50-day moving average, which is good that we're above it. The 50-day is really important. But we also broke up above this trend line, and we're holding above it and above the 50-day, which is really, really important. And we've got this flat top above us, which is also pretty cool, because if you're not in this trade, you could trade this as a flat top breakout. This is UEC, not URA. This is a day chart. If we look at the 4-hour chart, you'll see there are plenty of opportunities for a flat top breakout here and a rally further higher. And you can, if you're a day trader, take the size of this consolidation range. That's from $6.80 down to $5.80. Call that a dollar range. So we can use that as our target for a flat top breakout if you're a day trader. So we want to go from 680 to 780. Simple as that, really. And that would give us a, let's go back to the day chart. That would give us a technical target for this trade, 780. And what I can do, yeah, so just gonna have a look at the weekly chart on this very quickly, because there's a key level above us. Yeah, so there's a channel coming down. There goes my cell phone, sorry about that. So there goes a channel coming down, and sort of meets us. Yeah, it's not a great channel. Actually, I'm going to delete that. Let's get rid of that. And I'm going to move. Yeah, let's just get rid of all of this. There's no real channel. There's no point in drawing things that aren't there. We all get drawn into that. There's a level here. Let's just put that in. That's at 745. That's these previous highs here. So 745, but I'm saying 780 for a day trade. So let's just move that up a wee bit. Put that at 780. So there we go. So if you're a day trader, that's your target with a flat top breakout. And when you trade the flat top breakout, trade it as a breakout pullback, as always. So what you want is for this to break out through here, move up. Let me try and draw that for you quickly. I don't know what happened to our thing, to our top there. So we want to see a breakout like that. No, we don't want that. Yeah, we want to see a breakout, a pullback to the breakout level, and then a resumption, something like that. So don't trade it on the initial breakout. Wait for the pullback, get into the trade, and then trade it up to $7.80 if you're a day trader. We're aiming for $30 on UEC eventually in 2027. Or was it 2026? I calculated the time it'll take to get there. 2026, I think, or late 26. We should be at about $30 on UEC. But for now, $7.80 if you're a day trader, that seems pretty good. So we talked all about natural gas. We haven't talked about Brent crude, and WTI we're long on. And we're long from exactly, I can't remember. I think it was $70.40. Just above $70. We're now at $72.20. And that's what I'm looking for on WTI, and that's my target down there, $63.60, and then after that down to about 55, 50, somewhere down to these regions down here, and possibly $35, who knows. But first of all, 65, then maybe 55, and we'll take it from there. But we need a rally to get that going, and in order to get up to the $82 to $84 level to sell, we've taken a long trade at the $70 level on WTI. So that's that. I think that's all pretty good. And then London cocoa, we're short. This is US cocoa. We have nothing on soya, nothing on wheat, none of those I'm going to talk about. This is US cocoa, and that's dropping down nicely. We're not in this one because I can't trade this, but let's have a look at London cocoa. And this is the one that we're short on. And we've taken 60% profit on London cocoa shorts right from the top. We got out right at the bottom a couple of days ago. We got out about 3,360, I think it was, very close to the bottom. We've bounced up since there. We still have a 40% position on short, and our target is initially down here at about 3,000, somewhere in this region, down there. And I think we could get much, much lower on London cocoa, aiming for around about 2,700 or so. We're at 3,470 now. Great place to short if you're not short already. Having said that, we've already taken 60% of our profit on London cocoa. We've taken a handsome profit on that, and I'm not looking to add to that any further. I'm happy with what we've got so far. And then Bitcoin, well, there was the big news about this Bitcoin ETF being approved by the SEC. As it turns out, it was not true, but the memo that came out, which turned out to be a leak and not a hoax. That's what I'm saying. I don't think it was a hoax. I think it was a leak. The language in that memo is too good for a hoaxer to have done it. And I said, if you remember, Bitcoin ETF is when we might see this market drop off. Now, it's already dropped off on that so-called hoax memo that came out from the SEC saying it has now been approved. People can now trade Bitcoin online whenever they want, and with certain restrictions and regulations, have a wonderful time trading Bitcoin. Then they retracted it 10 minutes later, saying that was not true. It has not been approved. It was a leak. It was a false break, so to speak. However, the way that was worded, and I studied it pretty well, is it doesn't look like a false leak. It looks like an actual leak, which means that it was designed or designated to be sent out a little bit later on, got sent out too early, not in error, just too early. And I think that was the announcement of the approval of the Bitcoin ETF. And Bitcoin, despite the fact that people have been selling it off based on the wrong news, I think it turns out that it's the right news, and that this Bitcoin ETF is about to be announced, which means that this sell-off may not have been the wrong thing in the first place, or it may have been completely the wrong thing, because when they do say, yes, excuse me for that, sorry. Yeah. Sorry about that. So when they do say, yes, it has been approved, and we can all now trade Bitcoin ETFs, perhaps this will rally, and that everyone was wrong about buying the rumors and selling the news. I don't know. Anyway, I'm staying away from it for now. We'll wait for the dust to settle and wait for a couple of days and see how that goes. Now, the one I wanted to talk to you about, excuse me, sorry about this, folks. That's my son phoning. I wanted to tell you something. That's just reminded me. Thank you very much. That was my other son. My son, where are we? My son on this natural gas trade, and shout out to you, Josh, my son Josh, who's a young man, but he's interested in trading, very interested in the finance world. He lives in London, in the city. He works in finance, but he trades for himself. And he took this long natural gas trade, as we did, from these lows, and he got out at the high. He got out of everything. I have not got out of everything yet. Still got 25% left, but he took all of his profits, as it turns out. Better timing of the market than I have been with my last 25%. And he made $20,000 British pounds on his trade, long from the bottom, out at the top, just like we did and many other people did as well. So well done to you, Josh. Very proud of you. Yeah, I'm not recommending your trading approach to everyone else, but you did well and got a little lucky this time. So well done. £20,000. It's a lot of money on a long natural gas trade. So well done. And that was my other son calling. That's just reminded me. I wanted to give him a shout out and let you know about that. But going back to Bitcoin, yeah, so let's see, wait and see. I'm going to give that a little bit of time for the dust to settle. But we may be looking to buy Bitcoin on dips or sell in rallies. I'm not sure. And then this one, biotech, well, with the world, I'm going to actually switch. This is the XBIT ticker, which I talked to you about earlier. If you're interested in a good trade setup, which I think this is, I'm going to switch charts here. This is my Black Bull ticker. Let's just get rid of Black Bull. We don't want that. I'm going to go with the NASDAQ ticker. So this is, and I'm also going to switch this to a weekly chart. This is XBIT. This is the biotech ETF. And look where we are. Now, this is, we're down at $4.50. We've been up as high as $26, $27. In fact, even higher. Yeah, about $30. Actually, this chart's very, very similar to the URA ETF, funny enough, and it's got nothing to do with it. It's just by the by. But we're right at the bottoms here. We've got an aging population. Medical technology and energy are going to be the two great plays in the next decade. Energy, medical, and AI. Those three things are going to be the future for, I think, the next big things, the next big moves, the next big products, names in the next 10 years. And I'm interested in buying biotech stocks because we have an aging population in developed countries, dramatically aging, declining birth rate. People are getting older and sicker. We've got Alzheimer's cropping up all over the show, all sorts of other diseases associated with age, which are going to get worse and worse. And this is super cheap, dirt cheap. And have a look at what happened on after trading yesterday on XBIT. Look, we can't get a lot lower on this. I think we've got no power at the moment here in Port Elizabeth, so I'm running on batteries. So I'm hoping this won't run out. So that's what happened yesterday on XBIT, bouncing off that low. There's the support level. I like this very much. I'm going to be buying XBIT at the open, and my target for this is, well, really $30 basically, but we're at $4.50 now. But there's so many areas to take profit on as we go up and down. It's not going to be a straight line. It's going to be slow like uranium. It's going to take time. It's going to take 10 years like uranium, maybe 5 to 7 years. But look at all that stuff on the left-hand side there, targets that we can aim for, and places where we can take profit, get out, and buy on dips again. XBIT, biotech. Like it very much. That's my hot tip for the next 10 years. And that's it, folks. Have a fantastic day. I'm not even going to get to questions today, I'm afraid. So I hope I've covered everything that you're interested in. And I've got to get this up and out. And I will speak to you very, very soon. For those of you in my trading room, I'll see you there in about 10 or 15 minutes.